Welcome back. You're watching India Market Open. Let's talk about Zen Technologies. Their numbers are out and a healthy set of numbers, 47% up on revenues, EBIT margins, a little lower than last time, but their order book has gone up and overall it has been a healthy set of numbers. The stock is down today, perhaps in part because expectations were higher in terms of the revenue and profit numbers. Ashok Atluri, CMD of Zen Technologies, is joining us now, not to just talk about the financials, of course we'll get into that, but also on the road ahead. Mr. Atluri, very good morning. Tamanna here, with me is Agam, and great as always to speak with you on NDTV Profit. Let's begin with this quarter and actually this financial year. A very strong order book. Solid order book actually at the end of FY24 with a 1402 crore number. What is the outlook on the order book? Let me start with that. And if you can just give us your take on why we've seen margins compressed. Is it all due to raw material costs going up?
Yes, so order book is at 1400 crores and out of that we have the equipment orders about 1140 crores, and again, even the next year is going to be pretty good. We are expecting to execute more than 900 crores of orders this time. The margins, we have been saying always, that the EBITDA margin will be around 35%, and the net profit margin will be around profit after tax margin will be around 25%. So we have exceeded that. Perhaps the market had higher expectations, so I'm not very sure about that, but this is what our guidance has been, and we have done a little better than that.
So it is down to market expectations, I assume, and the reason is because of the rate at which your order book has gone up, Mr. Atluri. And perhaps that is why. The concern is that you're going to have a lot of your cash flow also tied up in your inventory and your raw materials. Do you see that easing and margins going up at some point, or is this the range which is sustainable, the 35 to 36%?
Yeah, so that's the easily sustainable range. So we think it'll go on. And actually, in terms of work, we don't have any stress in terms of cash or working capital as such, because we get advances from the government and we execute. And once we execute, we do get the payments on time. So there's no financial liquidity stress as such at this point in time. The only thing is, we had predicted, we had told the shareholders that, we expect a turnover of 450 crores at least. And we had at 430 crores. So that was a little underperformance of about 4 to 5%. So there is some disappointment there. But in terms of profit, I think we have delivered what we had promised.
And you see turnover now. What are your projections for turnover going forward?
So we have given 900 crore plus projection for the next year.
Wow.
And I mean, we have the order book of 1140 crores, and we will be executing 900 crores out of that. So
correct.
That's been
so it's in the bag in that sense, yes.
Sure. So you just mentioned order book of around 1140 odd crores, and about out of which you will execute 900 crores this financial year. Can you tell us about your expectation in terms of incremental orders coming through as far as this upcoming financial year is concerned? Some sort of a number that you're targeting, you're working with?
So equipment orders, while we execute 900 plus, we expect the order book to go equipment from 1100 to about 1500 crores. That's our expectation.
All right. And also, if you could tell us about whether or not you are planning some sort of acquisitions, inorganic growth that can be expected going into this year.
So we are looking at targets to acquire. Again, our checklist is a little stronger checklist in the sense that we want R&D to be, it has to be a R&D IP-owned company, not just a manufacturing outfit. And they should have deep patents in that. So we have a very stringent checklist. So if something passes the checklist and helps us expand into our adjacencies, then we'll definitely look at those companies. So, if we have a enabling resolution passed by our shareholders. So we should be, if we get an opportunity, we will definitely acquire such a kind of a company.
Is there anything that you've shortlisted in terms of inorganic growth? You're saying you're saying it has to pass your checklist, but is there anything on that list first?
So yeah, I mean, we are looking at 5, 6 companies. Obviously at this point we cannot name them,
Yeah.
but they're both Indian and foreign companies. So we're looking at them. The moment something is finalized, we'll definitely let you know.
Of course. You also have passed a board resolution to raise 1,000 crore rupees. Give us a few more details on this, Mr. Atluri. By when, by what mechanism, what time frame, and for what?
So this is again it's for a QIP, and we will, once we are in fact in discussions with internally with the board and some stakeholders on when should be the time for the raise of the money. But I think we will be communicating it in a couple of months about that, if not earlier.
All right. Mr. Atluri, if you could also tell us about your exports, about markets abroad that you are developing at the moment. I believe you are eyeing Middle East, Africa, and these regions where you look to increase your exports going. Can you tell us a little bit more about this?
So, we did about 20% of our revenue was from exports. We expect that revenue to go up to about 30% next year. And we are focusing on, Middle East, South African countries and the CIS because they have the Russian equipment there. So other than this, we expect that there will be a tremendous opportunity even in Europe and America. And, in the Middle East, especially Saudi is one country that we are looking at. So we expect there will be exponential opportunities in the new markets too, in addition to the existing markets. And and the growth will be very significant from export.
Right. Mr. Atluri, can you also tell us about the anti-drone market, how big it is, and what are the opportunities for the company here?
So, we are, in the current year, we did about 25% anti-drone systems and 75% were simulators. We expect this to go in favor of anti-drone systems. An anti-drone system is the latest requirement domestically and internationally because it's now becoming a drone warfare. The warfare, there's nothing called warfare now. It's all drone warfare, and everybody wants protection against drones. So anti-drone is a thing, product that we have. There were the open tenders by the armed forces, and we were the only person who qualified for Air Force or the Army. So it was a resultant single vendor situation. Nobody has the IP. It was under some category called indigenously designed, developed, and manufactured. So only we got qualified in that, and we expect that this opportunity will explode both domestically and internationally, and we will be a big beneficiary of this. And the market size, it's around 10,000 crores is what our estimate is, but it will be a little higher than that.
Okay. Just, Mr. Atluri, wanted to know your outlook for your order book. I mean, you have already 1,400 crores in the bag. You'll execute about 900 crores next year. But going forward, do you expect this order book to augment at the same rate? I'm trying to understand, since a lot of these orders get front-loaded and then executed over time. So what is this looking like another year out?
So, we are predicting that we will do about 1,350 crore. We'll have a growth rate of another 50% the year after. So in the next year. So, and we expect the equipment order book position to be around 1,500 crores, and maybe if you add up the AMC, maybe about 1,800 crores or so.
All right, Mr. Atluri, a final question from my end. Your R&D spends have increased within the range of around 28 to 30%. Are we expecting this to continue? Of course, by that I mean with respect to your revenues. Are we expecting this to continue going forward?
Yeah, we do expect earlier we were spending around 15 crores per quarter, maybe about 15 crores in a year. But now we expect that to definitely go up significantly. Yeah.
Thank you so much, Mr. Atluri. The CMD of Zen Technology is talking about their outlook. They expect another 50% growth in the order book next year. That's an upside. But right now, the turnover was slightly below market estimates.